The tech sector had a rough start to the year. Many high valuation firms have now seen their market caps recede slightly after prospects of tighter rate policy knocking their stocks lower. And now momentum appears to be building to regulate the sector. Joining us right now to discuss that and so much more is Joe Lonsdale, managing partner at 8VC and co-founder of Palantir. Joe, it's great to see you this morning. Let's just speak to the valuation issue. I know you live in the private markets, but the private markets oftentimes key off the public markets, and there is a downdraft taking place in the public markets around tech.
I'm living more in the public markets as well these days. You know, when you've been doing this for a while, these companies go out, and yeah, it's amazing. I think 40% of the tech companies have retraced more than 50% from their highs, and you see a lot of these really small, $1, $2, $3 billion market cap companies now. Great companies. They're high growth. They're growing 30%, 40% or more. And so many of them have gone public, Andrew, that I think the market doesn't really understand a lot of them. And maybe some of them were overvalued, but a lot of them seem pretty cheap to me right now. I don't think they're understood.
And so are you buying? I mean, are you looking at these prices and saying, actually, here's an opportunity here?
I actually am, both out of our mid-stage venture fund. I'm seeing some public stuff that they say, wow, in the private markets, this would cost twice as much. And doubling down on some of these things. And then personally, my personal accounts, I'd pretty much diversified to real estate and REITs and all sorts of things last couple of years. And then for the first time, my personal accounts, there's early growth companies I know that I think the great CEOs. And I think, there's always a question in the macro world, is the growth going to slow down because of macro? And is that part of what's going on? But when you start seeing multiples of these really high growth companies get down to 7 or 8x revenue with high margin, there's some pretty interesting things out there.
You want to name some names?
I'll name one my fund has not been involved with, but that I'm very bullish on. Here in Austin, I got to know the CEO of Big Commerce. I think Brent's really talented. I think the stock's just down so much that I'm shocked. I'll name another one I have been involved with. I was the first outside investor in Blend a decade ago, and this is a really high growth company. My friend was making fun of Blend's IR. He said it looks like if they have an IR guy, the IR is so bad that maybe the IR guy short the stock. So I don't know what's going on with their IR department. I don't think they've explained the story to the street very well. Their market cap's somewhere around $1.5 billion, and it's an amazing high growth company that has all sorts of things they're building on the platform. So those are two examples, Big Commerce and Blend, of things that just seem really cheap to me.
Shepard Smith here. Thanks for watching CNBC on YouTube.